It's a pleasure to introduce our next speaker, who is joining us from Singapore. Good evening, William. William RAE is the co-founder and CEO of XDA, a company at the forefront of financial innovation through digital securities. In this session, he will share a success story on how tokenization is transforming access to financing. William, welcome. Thank you for being with us today, and the floor is yours.
It's an absolute pleasure to be here, and apologies I couldn't be there in person. As Lexuri noted, I'm dialing in from a wet Singapore, but I hope that the day has gone well so far. It's probably worth me just giving you a brief background about myself and how that relates to what we're doing at XDA, Excellium Digital Assets. My background's in more traditional corporate finance and investment banking. I started my career at Ernst & Young and spent some time at Deloitte in London and in Sydney. And I also worked for a family office and an investment bank, a boutique investment bank. And relevant to this is during my role at the investment bank, we were responsible for raising institutional capital into private funds, private real estate funds, and particularly focused on the US market, but also the Australian market. And so we would be talking to the largest institutional investors around the world. And I quickly realized how outdated and cumbersome and antiquated the private markets are. And I'm sure you've been talking about this today verbatim, so apologies if I am repeating other people's statements. But the light bulb moment for me was tokenization. I still think tokenization solves a lot of the issues around the private markets. And yeah, I just wanted to give you that background for why we're doing this at XDA, and I'll just share my screen so we can talk about the business and the product in a bit more detail. So let me just do this. Can you still hear me and see my screen?
Yes.
Fantastic. Well, so I mentioned tokenization. We need to change the term digital securities and tokenization a fair bit. So when I refer to digital securities, you can see here on the screen, there are four real components of it and value add, if you like, around what we're doing. So first and foremost, it's giving the investors some protection, robust legal framework. They are debt instruments that we issue from a Luxembourg-based vehicle that's fully compliant with Luxembourg securities law, offering the investor that protection that they need and are sought after. They're offering a flexible and tax efficient vehicle. They are asset-backed, and by that I mean the issuances in Luxembourg are mirroring the underlying investments. So the underlying investments might be a private equity fund, might be a private company, might be a real estate product, real estate development. And so the vehicle is giving the investors direct exposure without necessarily having to deal with the complexities around or associated with direct ownership. And so you've probably heard this has been discussed today again, but enhanced liquidity. So our digital securities are tokenized and issued directly onto the blockchain. And so the key benefit of that is we don't need to go through the traditional clearinghouse. And so the securities, i.e. the tokens, are issued bilaterally, if you like, to the investors. And there's also a much more efficient secondary market around those tokens, because again, it is issued onto the blockchain, which is a global infrastructure, and the investors can trade amongst themselves bilaterally. And the fourth component there is digitization and efficiency. We view tokenization as a key element of that digitization, but it's not covering everything. So we like to add efficiencies and digitize the process as much as possible. I promise we'll get to the actual case study, which Lex already referred to, but I do think it's important just to look at the market and you know, where it is we're coming at, what is the problem that we're solving. I've touched on it before. I won't spend much time on this slide for your benefit, but you can see on the left-hand side of, you know, we've got limited accessibility. Traditionally, this has been, the private markets has been dominated by the institutional investors. These investments are typically illiquid, they're manual processes, and opaque. The data flow is typically quite slow. So the latency there is something to consider. And what we're doing on that right-hand column is we're opening up the private markets to a global digital marketplace with enhanced liquidity, focused on automation, and with the idea of bringing in quality data. I love this slide. This is, I can't claim it, unfortunately. This is done by Bain and Company. You can see, so what this is telling us is across institutional investors and high net worth individuals, there is roughly $300 trillion of wealth that is being invested into everything, into the stock market, into bonds, into the private markets. You can see on the left-hand side, this is the institutional component. Well, you can see firstly that it's actually split. The wealth is split half between institutional wealth, and on the right-hand side, it's roughly half. But the institutional investors have roughly 20% exposure or allocation to the alternative investment market, the private markets, whereas this is very bare. All right, so this is the key story at the moment, where there is a significant growth opportunity to capture this high net worth individual investor market into the private alternative investment world. And we might ask ourselves, why aren't these individuals, why aren't the high net worth individuals investing into the private markets? Well, again, I can't take claim of this slide, but this is from Bain and Company. They reference liquidity as a key barrier, collateralization within that bucket, and costs. So they view tokenization as a key solution to solving these barriers. Now, interestingly, to the right, there's another two columns there. We also focus on this. We also are focusing on streamlining the reporting process, streamlining the investor onboarding process, and also helping to improve the knowledge of investors about the private markets. So we are focusing on all four of those columns. And it's not just us thinking about this. You can see here Blackstone, KKR, Carlyle, Apollo, all the big boys are trying to capture this individual investor market. And just before we get to the case study, again, from our perspective, this is in line with the general themes that we see, and hopefully this resonates with this audience as well. And it'd be interesting to hear from the audience on this. But we see a future that is more digital than today. We see a future that is more decentralized than today. I mean, you just look at the number of listed companies, for example, that is trending downwards. Private companies are staying private for longer. And there's also the significant transfer of wealth from the boomers, who are all retiring, majority are retiring as we speak, to the next generations, the Gen Xers and millennials. And this is going to play a big role and influence on how individuals invest their wealth. And we see the private markets as a key beneficiary to that. So coming back to what we're doing at XDA, we work with companies and assets. On the left-hand side, we're bringing private companies and assets on chain. And so we are we structure all the deals, and we structure the deals that are fit for purpose, that are fit for the investor cohort that we're trying to attract. We establish and manage the investment vehicle, complete end-to-end solution there. So securitization vehicle, for example, in Luxembourg, we overlay that with tokenization. So we enhance that offering by incorporating, by tokenizing the capital base, and we work with our tokenization partner, Tokeny, and I'm not sure if Matt or any of the team are in the audience, but a shout out to Tokeny. They've been a great partner so far, and we raise capital, and that's the key function. And just on that company side, I mean, what we're trying to do, just very simplistically, is trying to open up the investment market to a much wider pool of investors into the private markets. We're speeding up the capital formation into private companies and private assets, and we're providing capital to these companies, these SMEs that are typically flown under the radar, with more sustainable capital that's in line with their medium to long-term views. And on the right-hand side, again, just we're simplifying the investment process. We're giving investors access to alternative investments. We're curating deals and innovative structures that we can scale. Importantly, we're providing that peer-to-peer trading infrastructure to make that much more efficient for investors, and we're building an investor community in the private markets. I know you may have some questions, but we can certainly address any questions you have at the end. But just for the case study, so XDA is backed by a family office, and the principal is located in Portugal. It's from Portugal, so that's our connection to the Iberian Peninsula. The Navigator Collection is a very interesting company. It's a fast-growing hospitality company in Portugal that manages over 500 keys today, but it's got a very ambitious growth profile, and they are seeking to raise 10 million euros in growth capital for this expansion. But interestingly, they're looking for flexible financing, which is aligned to their goals, their medium-term goals, and they have access to bank finance for your information, but they interestingly viewed the traditional lending a little bit too rigid, and so that's why they approached us, and it's a perfect fit, really. So we're partnered with the Navigator Collection to develop an innovative funding model. And so what we've done, we've created a convertible loan product, which is actually backed by Bitcoin. Now, I'm not sure if Bitcoin has come up today, and apologies if people have, if that goes over people's heads or they're anti Bitcoin. But for us, it was an interesting component. So we wanted to add a layer of collateral for the investors to give them additional security. I mean, Bitcoin is a global neutral asset, in our opinion. It's highly liquid. You can mark to market. You can value it at any time. So it's an asset or a product that is recognizable and quite easy to manage. And we think that adds a layer of uniqueness to the product and security, more importantly, additional collateral to our investors. So we've created a dedicated securitization vehicle to efficiently pool the investor capital, and we've tokenized that capital base. And so the results are, again, because we've tokenized it, it's issued, the securities are issued directly onto the blockchain. No need to go through the traditional clearing system. The security is mirroring the underlying asset or the underlying investment, and in this case, it's the convertible loan, which is a 4-year product with interest rate and that Bitcoin reserve, as I mentioned. Programmable compliance. That is why we chose Tokeny as our partner, because we can control the investors that are qualified to buy the tokens. And so we want to make sure that we are complying with all securities law, and that is a key component. So all KYC, AML is high on the priority list for us, and again, that's why we chose Tokeny, because of that institutional layer to ensure that we can actually control the buyers of the tokens, the qualified investors. We've structured it so that investors can invest a minimum investment of €40,000, and I'll just finish there on that last point. We have a sort of internal motto, if you like, where we focus on total risk-adjusted returns rather than total fees. And I'm not saying that all managers out there focus on fees, but it has had some pushback from the market and some investors, and it has built a reputation, if you like, the private market managers. But for us, it's more fit for the new age style of investors, where we focus on the total risk-adjusted returns. So, for example, there are no fees on the secondary trades at all, and the performance fee, for example, we have completely aligned ourselves with the investors, and it's literally just a component, a small percentage of the Bitcoin reserve that is only paid out at maturity. So again, it's creating these solutions that are fit for this new style of investor, if you like. I'm just conscious of time. I've got some additional. What have I done? I've got some additional slides about the team, and obviously I'm happy to share this to anyone that's interested. But perhaps I just open it up to the floor for any questions.
What's at the moment, I guess, the typical profile client that is requesting these services in the world of the SMEs?
Yeah, it's a good question. Absolutely. We feel there's a gap in the market at the moment for exactly that, the SMEs. I spent some time working in M&A advisory at Deloitte, and that was the market we focused on. And they typically are less served by the traditional banks, for example, and they certainly fly under the radar of the large private equity firms. I mean, these large private equity firms, they need massive scale, and they're targeting larger companies. But for us, it comes back to more first principles, if you like, where we feel that the economy, the real economy, is the important factor. I think it's the market over the last 30 years has been heavily financialized. And the real economy, there are plenty of companies out there who are doing quite well and cash generative and profitable, but they just need access to more sustainable capital, if you like, and that's the mission of us.
Yeah.
Okay, thank you, William. Thanks for joining us today, and good evening.
Thank you very much.
Bye-bye.
Bye-bye.